Hello, this is Dr. Bhushan Shankar. Welcome back. Now today in this video we are going to see how Nifty moves in a week. When I say week, it's taken from one expiry to next expiry. So now let us see how Nifty has moved in this period. I'll be using percentage moves so that irrespective of Nifty levels, there will be uniformity. Now more than 10% or less than 10% down in a week, like 10% plus or minus move, total if you see 99% of times you don't get that big a move. Now this study is done from January 2000, so last 22 years, but Nifty moving 10% at end of the week is less than 1% probability in either direction total. 5% move on the upside it's 3.97 and downside also it's almost 4% on each side. Now but remember one thing, when I say from January 2000, this includes the big events like the big bear markets like 2008, where Nifty hit two lower circuits on consecutive days. Okay, 2009 bull market when UPA government got elected, two upper circuits on the same day included in that. Then all other events like demonetization, election results, budget, everything included, and these are weekly moves. So in a week, Nifty going by 5%, probability is barely 4%. Okay. Many of us, we are expecting a huge move. Nifty will go here and Nifty will go there. It doesn't go in 1 week. Right? 3% plus or minus. It is total, if you say it's a bit above 25%. Means out of 4 weeks, if you say at random, once Nifty may go outside this 3% plus or minus range, 3 times it's likely to fall within the range. Okay. Majority of the moves you will find plus or minus 2% contains most of the moves. Alright. For say almost 58% times Nifty is within plus or minus 2% range, and barely remaining 42-43% times it goes out of this range. So we can say that weekly Nifty, it gives 2% plus or minus move around 43% of times. Now if you talk of what strategy can we do, many people are fond of writing options. There's a fad that writing options is going to give you money, some misconception. So let us put it to the acid test. Premiums of at the money call and put together is most of the time between 1.5 to 2%. Of course, if volatility is very less, then even this total will be less. If volatility is high, then it will be more than 2%. But then even the move is likely to be bigger. So majority of the times VIX, IndiaVix is somewhere between 13 to 18 and premium is somewhere between 1.5 to 2% for writing at the money call and put. But remember, 57% of times Nifty is going to expire outside this range and you are going to lose money in that. Okay, maybe loss may be more, loss may be less, but there is likely to be a loss. But at the same time, somebody buys at the money call and put every weekly expiry and closes as soon as 2% move is over in any direction. 50% times he will be in a profit. Now remember, when I say 2% move, it's possible within the week it went outside that range and again came back. I have checked from close to close. Right. So simple thing, as soon as it crosses the 2% limit on in any side, either side, what you have to do? You have to book profit in call as well as put. Net you are going to make money, except unless it happens on the expiry date itself, but still you will recover your investment if that happens. Option seller who writes ATM call and put is likely to be in a loss for 50% times approximately, because he gets some cushion because of the sold option premium. But outside 2% range, he is not going to get that cushion. Okay. So if an option writer writes call and put about 3% out of the money, instead of short straddle, he goes for a short strangle. 3% higher strike price call he writes, 3% lower strike price put he writes. There is a greater probability that he will make money. Okay. About 75% times he is going to make money. And that is more important, that because his probability, margin of profit may be less, but probability of profit is more for him. All right. At the same time, if VIX is greater than 20, IndiaVix is greater than 20, then Nifty tends to move outside these 3% limits more often. But if IndiaVix is less than 20, then probability of crossing these 3% limits is even less. So what we can generalize? We can generalize that if VIX is less than 20, you can sell 3% OTM call, you can sell 3% OTM put, and probability is high that by end of the week you will be in profit. Okay, so that will be a good strategy if IndiaVix is below 20. If IndiaVix is higher than 20, straddle or strangle, short straddle or short strangle may not be great strategies. So more about this we are going to learn in the next video. See you later.